The EEM, Big Emerging Markets ETF, far outperforming the S&P 500 this year. The question is not what it has done, but what it will do. So let's talk about the EEM on Trading Nation. Rich Ross with Evercore ISI, Eddy Elfenbein editing the Crossing Wall Street blog with us now. Rich Ross, I'll start with you. Yes, it has outperformed, but as you have said, past performance is no guarantee of future performance or something to that effect. It's on every single commercial that we hear about the financial industry. What do you think is going to happen with the EEM?
Brian, I think we're going to see continued outperformance of the emerging markets. Look, if you had EM up 13%, more than twice the S&P with crude down 10%, then you likely also had Mississippi State over Yukon, and you had South Carolina and Oregon in your final four. You just didn't have it, Brian. And that tells me that EM is going to continue to work. Look at the chart. In the short term, you can see that run that we've been on here. Post the election, it fizzled out quickly for fears of that pro-U.S. Trump trade, kind of protectionist, but it's gone completely the other way in the face of the collapse in crude oil on a year-to-date basis. When you zoom out and look at that weekly, I love that head and shoulders bottom there, Brian. It's formed over the last 2 years. You're emerging in a very decisively bullish fashion, and that's without any help from crude oil. I think you're going to get some help from crude. Not a heroic advance. I'm not telling you go to 63, but I think you can get to 53, 57 here, and that's going to throw more fuel on this fire that's already burning very brightly, Brian. I would stick with the emerging markets on a relative basis. Not to say that I'm not buying the U.S., but I like EM over the S&P right now.
Okay, Eddy Elfenbein, you heard that bullish view. What's your take on the EEM?
I have to agree. I think there's a really good EM story going on right now. You know, as well as it did in the first quarter, going back to October 2010 to today, the ETF is flat while the S&P 500 has doubled. People don't realize just how much the U.S. has done better than these other markets around the world. The valuation differential is of the highest in recent history. And when these do turn, the emerging market trade, once that cycle starts, it tends to last for a couple of years. So I think there's a very good chance that this is the beginning of a long-term cycle that can last 3 or 5 years or even longer. I think this is a great time to get into emerging markets.
Wow, okay, bullish view there. You guys both disliking Under Armour in a different segment of Trading Nation, which everybody should check out, and now both liking the emerging markets. We got to get some people to disagree once in a while. Rich and Eddy, thank you both very much. We appreciate it. Folks, check out all the other segments that we have online. There's got to be thousands at this point, so go back and check them out. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.